The US dollar, USD, starts the week on the front foot and strengthens on Monday, with the US dollar index, DXY, edging higher and ticking 105.70 on the top side. The positive undertone for the greenback is supported by the increasing likelihood that the Republican Party will win a majority in the U.S. Congress after President-elect Donald Trump has already won the presidency, and the Republicans secured a majority in the U.S. Senate. The vote count for the House of Representatives is still ongoing, with only 4 more seats needed for the Republicans to win it. The U.S. economic calendar is empty on Monday in observance of Veterans Day. Stock markets in the U.S. will remain open, but bond markets will be closed. Later in the week, investors will pay close attention to speeches from several Federal Reserve (Fed) officials, including Fed Chair Jerome Powell, and the U.S. Consumer Price Index (CPI) data for October, which will be published on Wednesday. Daily digest market movers, GDP and CPI later this week. Due to the Veterans Day bank holiday, expect low volatility and volumes as U.S. bond markets remain closed on Monday. All equities are off to a good start this week. European equities are surging over 1%, while U.S. equities are in the green. Only exception is the Nasdaq, which is flat OT marginally in the red. The CME FedWatch tool is pricing in another 25 basis points rate cut by the Fed at the December 18th meeting by 68.5%. A smaller 31.5% chance is for rates to remain unchanged. The U.S. 10-year benchmark rate trades at 4.3%, and the bond market remains closed on Monday. U.S. dollar index technical analysis, risk of firm rejection for the rest of the week. The U.S. dollar index, DXY, pushes higher on Monday after headlines over the weekend that President-elect Trump has won the last remaining swing state in the U.S. election and has secured a substantial landslide victory. Should the House of Representatives, where counting is still ongoing, fall in the hands of the Republicans, expect another push higher in the DXY once the headline breaks and is confirmed by several media outlets. The first level to watch out for on the upside is 105.53, April 11th high, a very firm cap resistance, with 105.89, May 2nd high, just above. Once that level is broken, 106.52, the high of April and a double top, will be the last level standing before starting to talk about 107.00. On the downside, the round level of 104.00 and the 200-day simple moving average SMA at 103.86 should refrain from sending the DXY any lower.